Hello, hello, hello. How's everyone doing today? We are going literally jamming packed through lives one after the other today. So I wanted to make this live to get you guys ready for Monday. We obviously saw an increase in the share price, so we're going to go ahead and give you some support resistance levels. Also, the more Clover Health videos we make, the more we can update people on what's going on, right? So we have started to see some essentially a rebound on the Clover Health stock, and we've talked about a couple of indicators that we've indicated that that might have shifted the sentiment of a risk on market based off of historical data points. So we're going to go ahead and share this screen here really quickly, and we're going to do this live really fast here. And if you guys have any questions, please, as always, comment down in the chat. Better than just recording a video, it's good to just so if I say something too fast or whatnot, you guys can go ahead and correct me, and we'll go from there. If there's any, I'm a bit tired, I'm not gonna lie to you guys, but I'm gonna keep plowing through these, so make sure everyone understands what's going on with Clover Health. Trying to get my bearings really quickly. Make sure to post this on StockTwits if you can help us out. Put this up on StockTwits so people can see this. There's a lot of so in the past lives, just to summarize everything, Clover Health went to Barclays and also Citibank, and it's very simple. They've pretty much stated that the incumbents have not released their MCRs regarding the differentiation between direct contracting and Medicare Advantage. And it's very simple, and it's very safe to say that Clover Health is continuing to take market share from the incumbents, more directly Humana, and they're doing a really good job. So in this video, we're going to essentially do another fundamental analysis to kind of replow it out there, to get the word out there, and also talk about what we've been talking about. Also give you guys some new data and regarding past events from 1928 all the way up to essentially 2022, essentially giving us, literally an injection of knowledge that will allow us to make smart decisions and not become emotional, okay? Then we're gonna finish it off with some technical analysis, fundamental analysis, and artificial intelligence analysis. So let's get straight to it without further ado. So here we have the S&P after 10 weeks from a 1-year high. That's been down by 10%, like a drawdown. And as you can see here, every time we've had these data points, which we really haven't had a lot of, so we can just count them here in red dots, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. And this data goes all the way from 1928, yes, 1928, all the way up to 2022. So shout out to anyone who's born in 1938. I'm just kidding, right? So this is a lot of data. Long story short, every time you get a 10 on 10 pullback, within 2 months to 3 months and even 6 months, you get a positive win rate from 89% to 100% on the 3-month mark, with a 12% return, over a 12% return on the S&P 500. Guys, listen, when a specific futures, which incorporates the top 500 largest companies, rallies 12%, imagine what other stocks are going to be doing. Exactly. So that's all I have to say. So let's keep going. In terms of the smart money confidence, we have not seen, so smart money confidence basically tracks what big money is doing, what institutions are doing. And we've already seen there's been a lot of institutional buy orders for Clover Health, a lot of institutions, and we've already made that video. And we've gotten to a point, guys, where we've seen smart money confidence go at a level higher than the 2020 pandemic, which means that we've, when you get data sets to that level, within 2 weeks to 1 month to 2 months later from this date, from this dot point that we got, the signal, we get a win rate between 91% and then average return anywhere between 3.58% to 4.99%. That's huge when it comes to this, the SPY. That's huge, guys, right? Increasing that much is, very hard to do, but the data suggests from 2000 on to 2022, literally 22 years of data, suggests that this could be it, right? We could see a rebound. Maybe Clover Health has hit its bottom. Maybe this was our last chance to get in the $2 region, right? In terms of the probability of panic, this goes from 2010 to 2022. We have, every time we hit a panic level of at least 75%, we always seem to get a rebound as enthusiasm kicks back up and people start buying them, just people start becoming very, bullish on the stock market. Same thing here. When peak fear or panic settled in and hit around 80%, and enthusiasm started to kick back up as panic started to come down. We went ahead and saw a rebound in the market. So these are really good indicators that I use that are unfortunately pretty pricey, which comes with the the knowledge I spew out in our Patreon link down below. But what's interesting here, though, look at enthusiasm. Enthusiasm somehow is still high. Now, again, retail investors have slowly started to come into the market. And if you were to graph enthusiasm and draw a line through enthusiasm, you can kind of see a positive slope in a stepwise fashion in where every single couple of years, enthusiasm tends to be higher than it was before. And maybe that, and again, I'm just speculating here, perhaps, maybe that's because more retail investors are coming in the market. They're starting to understand the game of Wall Street. Maybe perhaps they've realized that if, overall, in the grand scheme of things, these dips, yeah, they may seem terrible, but if you were to zoom out, look at imagine someone says, I'm not getting in the market ever again. It's going to fall. It's going to fall. It's going to fall. I was right. It's going to fall. All of a sudden, they're gone. They've failed. In fact, if you look at data from Charles Schwab, if you were to perfectly time the market, starting out with the singular investment on all of these criteria versus invest immediately, which is just toss your money in there, or dollar cost average, or bad timing, you would still be better. Even with bad timing, you would still be better than that someone who has not been in the market, just staying in cash, right? Inflation would literally eat you alive. So it's obviously better the dollar cost average. It's, I would say, less of a headache, and you're not too far off from the perfect timing. All right, so going back, what I want to say is, though, enthusiasm could potentially drop more, which means that panic fear could be at an all-time high. I will tell you something. I am watching enthusiasm to drop lower, and we may be in for some more bearish news based off of this indicator. But I would say if you were to draw this line here, because enthusiasm just keeps increasing even after every panic sale that we've had in the past 10 years, enthusiasm people are just happier as long as we go in the market. So I don't think we might see an enthusiasm drop to these levels, but if we were to graph it, I'm looking at enthusiasm to at least, it's better to just graph it here, but to hit at least 20 to 15%, right? So again, yeah, exactly. It could be a bull trap, exactly. And based off of the enthusiasm to panic sentiment, it may seem that, and this takes into VIX and all these measurement here, it may seem that we may be in for a little bit slight more downturn. But again, this is just one part of the data set. Okay, so going in, we are starting to see from a macro index model, we are starting to see, though, we are going above 0.7. And every time we go over 0.7, it's bullish, right? So we hit a really terrible recession here down in 2008, and unfortunately, the stocks crashed. But as soon as we went over 0.7 in terms of the macro index model, stocks started to recover and rebound. And all of a sudden, once the macro index model hit this, we went ahead and dipped a little bit, and then it went back up. 2020 pandemic, went ahead and dipped, and then as soon as it passed 1.7, really quickly, literally, that's why they call it a V shape, we went ahead and we're on our way. But now guess what? We just passed the macro index model of 0.7. which suggests that things are starting to look a little bit more bullish. Again, you're not going to, a lot of people don't talk about this data. This is my many years in the market that I'm trying to give you guys the information to help you, okay? So in terms of, and we've talked about this before. We've definitely engaged in this before, and I talked to you guys. I told you, I said, hey, we got a signal. Smart money over dumb money ratio suggests that smart money is buying and dumb money is selling. And this is important because we don't get a lot of these data points. And every time, if we were to analyze these data points from 2000 to 2022, which is 22 years of information, and based off of all these hits that we've gotten from the data sets, we can see there's a win rate of 92%, and 2 months gave us a pretty safe return that was the highest in comparison to this 83% with the 10.83. What this is telling you is that within 2 months later, from the signal that we got, which I already mentioned to you last week, 2 weeks ago, we got almost a 9% return on the S&P, which suggests that we may possibly have hit a bottom, okay? So, again, there's a lot of data that goes into this. We like to remain academic here at All Stock Trades, and we like to provide you really good information. So, all right, so going into this, there's something called XLK. This basically is an ETF that lumps Apple, Microsoft, Google. It lumps all of the big tech, stocks, all the technology stocks. And what we've been seeing is we've been having a lot, especially these insiders. A lot of insiders have been buying, and this is indicative. One of the data points that are probably in there is Chelsea Clinton buying into Clover. A lot of insiders in the tech companies are buying a lot. And if you're part of our Al Stock Alerts or Mastering Stock Market course, we go ahead and publish sector rotations. And March 5th, we went ahead and published this, and we found that technology was doing terrible, and energy was going crazy. Yellow is energy, and this whole XLK that we're talking about, technology XLK, it's going down. So you're having, essentially, what you're doing is you're having technology go down and energy go up, right? But then guess what's interesting here? Guess what happened here, guys? We just went ahead and updated this for our Patreon members. And what we found is that now look at XLK. XLK now in this light green is going up and energy is going down. And if you look at it, technology is finally starting to shift. The market wants to shift out of energy and go into tech. And that's exactly what we're seeing here of the insiders buying. If you look at overall corporate insiders buying, they're not buying other stocks in terms of other ETFs. They're buying a lot from the XL. They're buying a lot of tech, which obviously we know tech is the future. That's where the revenue is, right? Revenue multiples, right? So now we talked about this before, but it's just important to just briefly talk about this, and then we'll go into the technical analysis, artificial intelligence analysis, and everything regarding Clover Health, right? But this is macro. It affects all stocks. So in terms of the Treasury yield curve, if you look at the 2-year, and then if you compare it to the 10-year federal note, we're starting to approach an inverted yield curve, which means that you're going to start making, in terms of 2 years, make more money off of the 10-year, which means that the economic outlook for 10 years is starting to go down. And this is going to invert. So this is it's going to go like this. It's going to kind of go up and go down, and that's inverted yield curve. And if you were to look at the data, this is the V2 money supply. This is incorrect. Give me un momento here, guys. Un momento. Un momento. I'll just pull it up. There. Let's go ahead and let's look at the max. There it is. Okay, so we'll just pull it up in real live data here. So if you go ahead and look at the 10-year Treasury constant maturity minus the 2-year, what it does is it basically takes the 10-year subtracted from the 2, right? And obviously, the smaller the number, the worse off the economy is going to be because it's going to go down. And this is the most predictive indicator of a recession. So we were already knowing that we were going down anyway before the pandemic, right? So, I remember when I was in my MBA courses at Eller, I remember we were like, it's an inverted yield curve. Ooh, the economy is going to probably slow down. And all of a sudden the pandemic happened and then boom, right? And then we got that. But guess what? Things started to go up, which is great. But now guess what? We're inverting again. An inversion is coming. And every time we've inverted we've inverted recession here. The gray's the recession. We've inverted, there's a recession. We've inverted down here, recession, inversion, recession, inversion, 2008 recession, boom, right? And now we're inverting again. So that's something to pay attention to. All right, let's exit this out. Okay. And then V2 money supply, we talked about those things. So now let's go ahead and do our analysis for Clover. Okay, so let's go down here to our stock research and let's get straight to business. So let's go ahead and we'll type in CLOV, any ticker you want. And this is called a Monte Carlo projection, which basically creates a bunch of what if scenarios and projects the stock price out for 30 days. And we can see here, it's very tight, and it's pretty good. I mean, it's pretty stabilizing. There is slight of a downturn, but it's pretty much consistent. Its levels are holding, which is pretty good. And the tighter it gets, the more likely possibility we're either going to get a breakout or a breakdown. Okay, so there's that. In terms of revenue estimates for Clover, again, you can type in any ticker symbol you want. We know that revenue is expected to grow, and here's the revenue expectation. It's 1 times to the 9th power, which is in billions from scientific notation. And we're already seeing this extends out to 2024, and we're seeing that revenue is going to step up. So this is exactly what we want. If you look at the technical analysis in terms of what does our TA say based off of our artificial intelligent technology, we are above the 100 MA. We are above the 220 and 50 MA monthly high, okay? A pocket pivot and an RSA divergence. And it's unfortunately overbought, but there is something called a pocket pivot. Now, some of you may not know what this is. It's a technical analysis term, and it's essentially is a concept that we talked about earlier in our last live, which basically shows that this is very favorable entry for a buy point, which essentially you were able to get in a stock before it essentially breaks out. So from our Monte Carlo projection and from our pocket pivot here, we can start to see this is kind of an example of how it looks like. And then from the TA perspective, it explodes. Now the question is, there's a lot of, this is my intrinsic value calculation. We'll calculate the intrinsic value right now. For my members, there's a couple of them in our member chat here on Patreon. A couple of them are having 2 accounts where they day trade Clover, and one of them are long, and they have another account where they, essentially buy and hold Clover. Because, just in case if, let's say, Clover does go down, they like the company, so, okay, great. They'll just hold it, right? So that's kind of what they're doing. So what we can do, though, to essentially make money off of this is you can use this information to day trade Clover Health. So that's another thing that you guys can do. But let's go ahead and look at if there's any unusual flow. Give me a moment here. Let me make sure I type this in correctly. So we got no data for unusual flow. Let's see if there's any data for big flow. Okay, good. So we got a strike. So the highest premiums is around 28,000 here. April 14 is the expiration, and we got a strike at 4 with a call. So that's good. This is good. This is good to see. Let's go ahead and take a look at institutions. We already know institutions are buying, but let's calculate at what percentage. So we have 180 million shares owned by institutions with a 9.96% increase in institutional ownership for the past 6 months. So this is good to hear, guys. This is really good news. In fact, if you were to take a look at the overall shares outstanding, which we can find out here. Okay, that's incorrect. Morningstar is incorrect. Let's go to overview here. This is Seeking Alpha. There it is. We have 470 shares. And from this data, we're getting 180 million shares as owned by institutions. Let's round up to 181. So if we take 181 divided by 470, that's 38% of institutions own essentially Clover. This is really good. Why? Because retail sold at the bottom and gave it to institutions. So that's the sad part, right? So, but hey, that's what retail does. But obviously you guys are way ahead of the game for you guys to even be here on a Saturday night. So that speaks a lot about your work ethic. Okay, so, and also your intelligence. So here, okay, we already talked about here, but now let's go ahead. Our Discord channel also it gives you information about Twitter. So it scans Twitter for tickers, and it looks like Clover's not on here, but here's the other ones. If you're interested in other stocks, here's, if you could, take a screenshot here. Here's what other stocks we have. But let's also look at Wall Street Bets. Yes, we can look at Wall Street Bets from here as well. So Wall Street Bets, let's see what people are talking about. So I don't see any Clover, but these are what Wall Street Bets people are talking about. Okay, now let's go ahead and let's look at the support and resistance levels for Clover Health. Because a lot of people are going to be day trading this, or they want to know what's going to happen with it. So we're going to go in and give you guys some information here regarding when they get in and all these things. If it passes, what are support and resistance levels that we should mention. Clover for the minute. Let me drink some water as this. Please comment down below. Let this be interactive if there's any questions. All right, so based on this, let's just look at the current share price really quickly. We're sitting at 350, okay? So right now, if on Monday comes, if it goes down and if it bounces off of the 383, it's going to go to the next level of resistance, which we'll look at the hour chart. But if it doesn't, the next level of support will be 310, 287, 267, and 231. So just make sure you have those in mind. I'm sure it'll bounce off of these here, but it's good to know because you can leverage this. Like for example, we saw that you could have gotten in here, bought here, enjoyed this nice bounce, wait for it. As soon as it broke, sell, wait for it here. It crashed, and you obviously have a next level of support. Once it crossed this, you buy, you go ahead and wait for it, you sell. Once it breaks, it crosses, you buy, you wait for it. If it dumps, it did not dump, you continue holding. Oh, it dumped, you sell, you wait for it, you get in, you wait for it, and then it's dumped. You see if you can get in, it dumps. You see how it helps having these support levels, day trading, and you can essentially use our AI technology for any stock. I mean, it's easy money, literally. So, okay, so let's go in now and let's go ahead and take a look at the hour chart. Exactly, yeah, and that's, there's going to be a wave of people that sold out, and once it starts to shoot up, you're going to get a lot of money coming in. And once it goes to 20, 25, then you're going to get a lot of those crazy people, buy at 30, let's hold to 100, and then that's when you can just give them the shares and let them sell them back to you when it goes back down. You know what I mean? Back to its intrinsic value, which we'll calculate, which it's in the 40s. So let's go ahead and let's talk about this. So now this is the hour chart. So right now, if it does crash down and bypasses the 338, we're going to want to take a look if it holds over the 321. If it's able to go through all those, the next stop, baby, is going to be $4.18. Yes, the next stop is going to be $4.18. And if it is able to hold that, $5.29, then $6.94. And then you'll almost start to basically form a cup and handle, okay? Which is good technical analysis indicator. Okay, so then now let's go ahead and let's look at the day chart. So same thing, 372, and then 266 is the level of support, and this looks like it's the resistance. So on Monday, we're going to look at this number here. This number is going to be the tall telling number, 372. Remember that, 372. 372. Remember that, because the stock's sitting at 350, right? And this is a monthly high that I don't think we've passed 350 in the month before. So this is good, you see? And you can start seeing the stepwise consistent pattern. If I had my Thinkorswim chart open, I would literally be mouth-watering over this, right? Because it has a little bit more information. But from this perspective, we're looking at 372. If it passes that, this is going to be very bullish. Okay, so now let's go ahead and let's just very quickly here. The top resistance here is $10.80. Okay, so now let's go to the weekly, which gives a lot of information. Once we do that, we see that after that 10 that we saw earlier, we have a resistance at the 12 and also the $15. But once we go ahead and pass that 372, we're going to, the next level is 419. And if we can continuously bounce over those and just go through them, we're looking pretty good. We're looking extremely good. All right, so there's that. Let's go ahead and take a look at any dark pool levels, like in terms of dark, what are people buying on the dark pool for Clover? All right, so for dark pool, we're getting a lot. We're getting 1.2 million shares for $2.50, another 1.33 million shares at $2.72, and 1.23 million shares at $3.03. So in terms of dark pool data, there is a lot of buy-in orders coming in that's not influencing the stock price, which means that institutions are buying at a very hush-hush price. The reason why you can't find it, the reason why you can't find the Discord link at the bottom is because we're in the live. However, I just posted it right here. This is the link. I don't want to post it too much because I don't want to annoy people. But again, just to give you guys, just to quickly diverge really quickly here and just give you guys a quick rundown. You'll find it here, and we're the cheapest, I can tell you that. This normally costs over $150 a month, but we're literally giving it for under $10 a month. We have a lifetime access as well, a lifetime membership with just one-time payment. But as you can see, this is what we offer. Don't get this one. This is if you want to meet with me and have your own private room where you can just talk with the robot. But this is all that we offer, and there's just so much information. It's taking a while for my computer to even load it. And I have 1 gigabit speed. I have 1 gigabit speed internet. So there's a lot going on here, guys. So this is, and you can tell based off of what's going on. We're looking literally at dark pool. So there's that, and I'm just going to hide it so we don't annoy everyone. So here is, because I don't want to pressure anyone to get this. I just want to be able to provide you guys great information. So now let's go ahead and let's look at flow sum. Okay. So if we look at flow sum here with Clover, look how sexy this is, guys. Look at the calls to puts. We're so bullish now on Clover here. It's just calls all the way, baby. And buys and sells. Obviously, red is sells. You know what I mean? And there's a lot more buy orders and sells. And again, you can look at any stock you want. All right. So now let's go ahead and let's look at my favorite, which is the Algo flow. The Algo flow, basically, let's do Clover here. CLOV 5-day. What the Algo flow does, guys, very simple, is that it looks at all the option chains and it basically tells you what the sentiment is, because it's very hard to look through those option chains and make a decision. Well, this graphs everything for you and it gives you the sentiment of what traders are thinking, the options traders are thinking. And that's exactly what the Algo score is up for Clover. What that basically is telling you is we're getting a bullish confluence because the stock price is going up too. I would love to see, honestly, the stock price go down and the Algo flow going up. But guess what, honeys? We already had that, which is 2-3 weeks ago. I can't believe I said honeys. I've never used that word before. 3-4 weeks ago. Correct me if I'm wrong, our Patreon people that are watching, but we've had the stock price go down and the Algo score go up. And now we're bearing the fruits to our labor. So I always like to zoom in to the Algo score. Again, you can pick any stock you want, but here we're talking about Clover. If you look at that, look at that V shape. Oh, that's Mamma Mia. That is just beautiful, right? So we're definitely bullish on the Clover stock, but now let's look at any matched dark pool. Let's see if, you know, in terms of the, this gives you a little bit more data in terms of dark pool. Take a drink of water here. So we got one match here. So what this tells me is that we had $2.7 million trying to come in and buy, literally buy at the end. So at March 18, we had a buy order at $3.50 come in, and unfortunately it was not filled. And that was $2.71 million in the dark pool that wanted to buy Clover Health. Why? Right? Interesting. This is bullish, okay? Now let's go ahead and let's take a look at our AI predictive model. This is our artificial intelligence analysis. So let's go ahead and take a look at this. So overall, from the intraday, it's saying it's bearish, but from a swing trade perspective and an options perspective and the combined total, we're looking at a confidence level that's bullish for the Clover Health stock. I mean, it's been a while since we've said these things, huh? All right. So as you can tell right now, we ran through a lot of analyses, right? We've done a lot of analyses. I mean, this is a lot of work that we've done, right? But let me tell you, we're not done yet, right? So now we're going to be doing our fundamental analysis, which basically goes in and calculates the intrinsic value of the Clover Health stock. Now, what we're going to be doing is we're going to be looking at the financial statement, and because it's free cash flow negative, we're going to take the revenue, multiply it by I would say 7%, and that's going to basically give us our estimated free cash flow. All right, so let's go ahead and do that. I'm going to just take this to a different screen here so I'm able to do it. My throat's getting a little dry here, so if you're really enjoying this, please subscribe, like. It helps out the channel a lot. I'm literally killing my throat. Give me a, sorry. Oh. Hey, Smiles. No problem. Thank you. All right, so we're going to go ahead and look at the revenue, and we're going to use numbers from 2018. I'm just going to go ahead and reload this because it's been a while. And this is our intrinsic value calculator. You'll find it in our Mastering Stock Market course. Which you guys, if you want that link, it's alstocktrades.com, which you can find right here, alstocktrades.com, which is obviously, you can see that below as well. I don't even have to type that in. So now you have the R, the revenue, okay? Now we're going to do the 2018, I feel like South Park, okay? 2019, 2020, 2021, okay? And then when 2022 is going to be in their most recent filings. If you remember their quarterly earnings report, they said that in 2022 they're going to make at least $3 billion, right? A little over that. So we're going to have them at $3 billion. Okay. Now again, these numbers are in millions. Let's answer some questions. Were you a research analyst? So no, I was not. However, I've been in the market for 10 years. I have 4 degrees. 3 bachelors, 1 master's. I'm also going to be completing my medical doctorate degree. I'm just an academic. I know how to break down information. I've been teaching for 15 years. I just want to teach people how these analysts do this stuff, right? This is just a financial channel in terms of educational. It's an educational platform, and we like to help, and we like to make sure we get a fair shake for retail investors. So that's all what we do here. But you can tell the information that we're providing is a little different than what normal YouTubers provide. Again, my career is not made off of YouTube. This is just my way of copying my brain into the internet and being able to kind of teach all of you guys out there. So let's go in 2018, they made 281 million. Then they made 454,690. And then this is, so I'm getting these numbers from here, but I know that this is incorrect. I know Clover in the back of my head. So this is incorrect. So let's just quickly go here really quickly and pull up the number. It's a faster way of doing it. So the number is actually here for their 20. So they got 41472. And we're gonna, as we promised, we take 7%. You could take 10%, take 5%. It's more of an art. Just bear with me here. Literally within 35 minutes, look at this. We went through so much information, guys. Look at that. All right, so now we're going to take the estimated free cash flow, which is what this is, the EFCF. Okay, now we're going to do 19.67, 31.829, 48.3, 103.04, 210. Okay, now back in 2018, they made 281 million. Again, this is net income, but this is just a compound annual growth rate. You can use revenue too, because we don't have net income to work with. Okay, so now in 2018, they've made 281, which again, the numbers are right there now. Okay, then in 2022, they're expected to make 3 billion, right? More than that, but they're growing at 81%. Now, again, the reason like you might be asking, where am I getting this information from? This 3 billion, very simple, from their statement. Let me go here. They're expected to make here 2022 total revenue expected to exceed 3 billion, driven by 90% year-over-year growth. Okay, so there's that. Okay, so just to give you guys where I'm getting the numbers from. So now, in terms of shares, we already talked about this. Shares were here. Excuse me, 470.85. So we're gonna put this here. So as soon as we do this, we're gonna get a bear case, a bear, base, and bull case, and here it is. So there's a lot going on here, and this is definitely not yet priced correctly, because then we got to take 2022, subtract from 2028. So very simple. We do 2022, subtract from 2018. That's 4 years then, because we have data for 4 years. And then we do 4 years here, short term, number of years, we put 4, right? And as soon as we put 4, let me see here, 281. Perfect. We get anywhere between 1086 to 1912. Okay? But there's an error to something that I did here. I'm trying to figure out where the error is. I know, yeah. I did a lot today. I'm a little tired. I'm a little overdoing it, but I'm just trying to give you guys as much value as I can. I'm trying to figure out what I messed up on. Let me do some reverse engineering here. Hold on. Let me just... Un momento. You know, that's the beauty about curating this proprietary intrinsic value calculation. The calculation is in my head, so I know the values, so I can sniff when something is wrong. I can just smell it. There's something wrong. So give me a moment. Let me un momento. My throat's killing me. I definitely need some sleep, as you can tell. I definitely do, but I want to make sure you guys are ready for Monday. Because we may be in for an upwards, and there might be some day traders that want to day trade. All right, let's see here. One moment. Also, my computer is really slow, so that's the other issue that I'm experiencing. So 150. Yeah, there it is. Okay. We'll cut it back down to 5%. I think 7% is too luxurious for them right now. And then from there, we can move on to 10 because we're going to be estimating their future. But even then, don't get too excited. This is too overvalued. Interesting. Let's give me a moment here. We've had it pre-calculated before in other videos if you guys just want to tune out and go to those other videos. I don't want to waste your time, but this is good for, and this is what it takes to analyze a stock, unfortunately. It's always back and forth. It's not as easy as just plug and chug. You got to look at the numbers, and if the numbers don't make sense, then you got to keep digging. So expect it to make 3,000 by here, and then, oh, okay, I got it. I figured it out. Okay. All right, I figured it out. So let's go back here, 470.85. You see, okay, I figured it out. Okay, so the reason why we want to extrapolate more into the future is they said that they're going to make $3 billion, but the problem is they're growing at an 81% growth rate. 81% is unsustainable. I just don't believe it, okay? I don't think they can grow that much. I want them at least at a 50% growth rate. So what we're going to be doing is, we've estimated this before, that we've estimated Clover Health's growth rate in terms of what we can expect out of them. So let me just see if I can find that growth graph that I've had. There, okay. So as you can see here, let me make it bigger. As you can see here, real quick, guys, in terms of the projection from 2024, we're expecting them to make $4 billion. Now, again, for 2022, I've expected them to make at least $2.5 billion, but Clover Health went ahead and they beat my expectations. They're saying they're going to get at least $3 billion. That's pretty much $500 more million than my expectation. So, holy crap, right? That's just impressive. So, what I think in 2024 from these projections, we're looking at $4 billion, right? But based off of what they're putting out now, we can bump this up, let's say to 500 million. Let's assume I'm not going to do 5 billion. I'm going to do 4.5 billion. So that's what we're going to be doing. So 2024, we do 4.5 billion. Again, these numbers are in millions. And as soon as we do that, boom, then we get the value of the Clover Health stock. My apologies. I'm very tired. My head is spinning. I'm not going to lie to you guys. Head is very spinning right now, but it's okay. I'm going to continue to keep going. Okay, so I appreciate that. I want to be able to serve you guys. You have no idea when I mean that. I mean that to the bottom of my heart. Definitely need some sleep. Yes, I do. I'm also studying as well in between lives here. Oh yeah, no. Again, we like to we put God first in everything we do. This is our mission statement. We have here. This is our mission statement. We respect all creeds of life. This is we always stand by to this. This is what we live by, and this is what and before I make a video, this is what we try to do. And let's go through here. Kramer is begging people to sell unprofitable companies. Some people listen to him. I think he is his fun chill. So normally, exactly. I don't like. Kramer is a clown. Kramer is a freaking clown. I don't like Kramer. I mean, he's a human. Let me preface that. I don't like Kramer's calls, right? I don't like Kramer's investment ideas, right? I just don't like it. But as a person, no, he's an American. I break bread with him, no worries. But in terms of his stock picks, No, right? Remember 2008 Bear Stearns? Remember that, Kramer? Bear Stearns 2008? Oh my Lord. Okay, anywho, based off of these calculations, we can see anywhere between $35.69 to $78.24. Now, what's interesting here is we got to also put in an 4,500 times 0.5 and take that, multiply it with that, you get 225, because we're also using 2024 numbers as well, and also 2023. But let's assume the average here. We can expect these numbers here anywhere between 52 to 114. Now, personally, my take is I would say $48. I would say $48 is a great price. That's me doing a lot of defensive mechanisms to be a little safer on that. But this is taking a 15% discount rate. Now, if you want to go crazy, you could take a, like we're talking like venture capital crazy. You could take a 25% discount rate. And don't pay attention to these numbers here. Don't pay attention, just pay attention to the green now, okay? With a 25% discount rate, that is insane, guys. We're looking, even then, $17.50. If you want to go crazy with a 45% discount rate, we're looking at $4.22. Guys, listen. Guys, this stock is undervalued, even with a 45% discount rate. That's what venture capitalists do. Listen, if you want to be a venture capitalist, they would buy the stock at $4.22. Guys, it traded almost $1.98. I think that is so undervalued. Okay, but we're gonna do 10, and this basically fixes my calculations to give you a bull, base and bear. But normally, I like to figure out what is the discount rate people are applying to Clover. And what they're doing right now, they're applying, I'm just kind of curious here, they're applying as of to these, I mean, let's call it 55, right? They're applying a 55% discount rate for $2.55. Isn't that crazy? A 55% discount rate. They're discounting the future cash flows of the company that's going to become profitable by next year with non-GAAP versus GAAP. Do a 55% discount rate? I mean, come on, guys. This is crazy. Holy shit. Sorry. All right, so this is, I just can't believe it. Honestly, this is going to be a juggernaut in the future. Just like how Peter Thiel and Elon Musk were able to calculate the intrinsic value of PayPal, and they were able to go back into 2020, 2025, 2030, back from 2005. This is what we're doing now. So imagine in 2030, 2035, what's going to happen to this stock. All right, so that was very, my apologies for the slight hiccup. I smelt some shit on this calculator, and I said, no, this doesn't look right, because I'm the one who designed it. So I'm like, this doesn't seem right. But now it looks good. So as always, I always want to provide you guys the best information. If you guys like this and want access to our Discord channel, not only do we have our artificial intelligence technology, but also other price targets of other companies that I think are undervalued, such as we got Foot Locker, we got Mara, we got Gold, which we are called out before even senators bought it, Shopify, Brief. If you want to also look at our coming soon Brain Machine, which is our own AI technology, it's going to be freaking epic. We got our Bullseye. We got our all these other things that we have here. We got our Senate House buys where members can look at what senators are purchasing and House of Representatives, and really cool in terms of profits here. I'm proud of everyone, but I mean, this says it all right here. Ken, one of my portfolios up 2,500 since joining 2 days ago. Best $10 I've ever spent. I mean, guys, you can't make this stuff up. All right. If you guys want it, this is the Patreon link down below. This is access to everything. Literally $10 is not going to come to me. It's going to be obviously going to the platform because it's very expensive to encapsulate this Bloomberg terminal-like thing that we've created. But here's the link down here for people that are interested. Do you use multiple methods to value? Absolutely, we use multiple methods. So here is the intrinsic value calculator, which is included in our Mastering Stock Market course. But if you go down below, we have another calculator called the book value Oh, you can't see my face here. Oh, now you really see my face. There we go. And let me just remove this here. So we have a book value calculator, which is great for dividend stocks. Essentially, you look at, like, for example, let's go to Coca-Cola. If you look at Coca-Cola, you can see that there's a dividends here. And there's a payout ratio. And you can see the dividend section here. We would basically measure that. And we also would measure the book value per share. We have the book value for the stock. And then we use the book value and we would put it in our intrinsic value calculator here because we have the average book value here as well. So there's multiple stocks. This is for beer, Al. I appreciate that, man. Thank you so much. Yeah, I definitely need one, man. I appreciate that. God bless. I really appreciate that. Thank you. So that's one method of evaluating a stock. The other method is we can also do a revenue multiple analysis. We've known that Clover Health has been through a revenue multiple anywhere between like 0.6, 0.8, which is like laughable, to 9.7, which is just, oh my God, that's just crazy. And let me just show you that if I can. We use that, and you could just take the revenue multiple and average it out from 9.7 in there. We can get 5, and you can just value the stock that way. However, the intrinsic value calculation here that you see is the preferred method. This is the most accurate method that you can get to, right? Because it literally goes into the company. But just for completion's sake, if you're anything like me, I don't like half-ass answers. I always like, I'm old school, so I like complete answers. This is really quickly, this is the price to sales ratio here for Clover, right? And you can see it hovered anywhere between like a 10 down here next to, like below a 1. So you take the average here, so that's around 5, and you can estimate the free cash flows that way. I mean, not free cash flows, the value of the stock that way. And it is a tech company. We're going to see in our last live, Vivek was like, well, hey guys, people in next year, they're going to be like, oh my God, they're actually a tech company. He made me chuckle. And then we're going to start seeing these valuations go sky high. LUMN. Yeah, I mean, just might as well, since we're here, let's go ahead and take a look at LUMN. So based off of this, just kind of give you a rundown. I'm not going to put this in the intrinsic value calculator because it takes time to go back and forth, but I will just kind of give you a brief synopsis of the company really quickly. So 2012, they made 18 million, and now 2021, they made 19 billion. So 18 billion to 19 billion. So they haven't really grown that much in terms of their revenue. It's been stagnant, but let's see how efficient is the company. So net income, they made 777 million. And then now they're making 2 billion. Looks like this company's pretty efficient. Okay. We might take a look into this. Free cash flow, 3146. Again, constant free cash flow. That's good. This is fine. That's good. This is good money. Let's take a look at their financial health. They have a lot of debt. Let's see why. Let's look at their financials. Balance sheet. Again, there's 3 documents that every person needs to know: income statement, balance sheet, and cash flow. All right. Just want to put that out there because some people don't know that. Assets. Okay. Total liabilities. Okay. Total. Interesting. Let's analyze Okay, good. Okay, let's see this one. Interesting. They are leveraged. They are leveraged. But we could do an intrinsic value calculation for it for sure. Let's do seeking alpha here. Just easy to use seeking. Let's do this. Okay, same thing. All right, so balance sheet. Yeah, I knew I'm getting a stronger computer. This has 64 gigabytes of RAM and it's still slow. I mean, I don't even understand. The streaming stuff is completely different. You need to have a very strong computer. So we're going to end up doing that for the channel. It's already coming in. So here's the assets. Yeah, so that they're definitely leveraged. So yeah, we'll do an intrinsic value calculation, but they're definitely leveraged. Is this a good dividend stock? So let's answer that question. So if you look at, and now we need to calculate it. Interesting. Based off of their payout ratio right now, it shows me the answer is no. So this is why we're going to be teaching in our Mastering Stock Market course. We're going to be teaching you how to find dividend stocks. And because the problem is whenever I see this, I see that their dividends is high. And it's like, I can tell a lean, I can tell that it's coming to you and you're like, ooh, dividends. And as soon as you bite, they catch you, right? The reason why is because the reason why their debt levels are high and their liabilities are high is most likely is they're paying this strong ass dividends, but they're getting it from debt. There's no way this is sustainable, which is why their dividends, if you look at their dividends, it's been decreasing over time. You see that? You see how their dividends from 2012, 2.9, their dividends has been decreasing. And better yet, let's go back now. When you understand financial sheets, you see how you understand the power of the business, right? Not all these freaking tubers. Well, if you look at the RSI and the MACD, we're starting to hit a level of support here, and it's going to go back up. I'm sorry, I don't mean to make fun of people. It's very funny. Okay. Oh, the Fibonacci sequence here, you can see. Oh, yeah. Oh. Sorry, I'm so sorry. It's just you got to look at fundamentals. If you don't understand fundamentals, you know what I mean. Clove on a Saturday. Oh no, what a legend, right? So yeah, I mean, sorry guys. It's Saturday night. You know what I mean? We're talking about stocks. Okay, so let's look at the dividends here for LUMN, you know? No, isn't that what they do? Okay, you know, and then they're probably in their mom's basement. Quiet, mom, I'm trying to record. I'm trying to be a YouTuber. I'm trying to be famous like me, Kevin. You know? Oh, let's look at the dividend history here, you know? All right, so you see the dividend history? Yeah, and it's been going down. Let's look at the max here. Yeah, the dividends has been going down. It seems to me it's unsustainable, but I need to do more DD, right? But we'll definitely go ahead and do it. We'll put it on the list. But I did this on purpose just to show you guys, minus me making a buffoon out of myself, kind of the internal process of this, right? Any chance Clove could get a dividend? So right now, the best thing that Clover Health can do is take that money, because the problem is whenever I see a company give out dividends or do share buybacks, it shows me that they have nowhere else to invest it in. No. Clover needs to take that money and invest it in. Now, it could be like another Humana in the future. I don't know if Humana offers a dividends, but maybe once it becomes really, really mature, of course. But it's a tech company. So I doubt they're going to offer a dividends if they're truly a tech company. I don't usually waste my time with YouTuber investors. I rather read charts and news articles. You're the real deal, though, so I appreciate that. I appreciate that. I thank you for all the way. You know that we try to give it to you real. This is, I mean, we're talking real stuff. You know, we're talking intrinsic value. We're talking artificial intelligent technology here. We like to keep it real. There's a lot of fake news, and I'm just sick and tired of lies, man. I'm just sick and tired of people. I want to puke whenever I read the media. You don't even know what's true anymore, right? I'm gonna start a YouTube channel teaching stocks in the same tone as Al's jokes. All I need to say is to the moon. I know you'll get like 5,000 people. Yeah, to the moon. You know, I know. It's like my dog. You know, that's how I talk to him. That's the tone of my voice I talk to. But yeah, guys, it's always a privilege and honor. You guys have no idea how much you mean to me. Seriously, very true. Love you guys a lot. It's about helping the community. At the end of the day, yeah, money's amazing, but it's what you do with what you have. At the end of the day, that's what really matters. It's what you do. It's the impact that you do. Because at the end of the day, I got a lecture from this billionaire who really opened my eyes. He said, "Listen, man, I'm on my dying deathbed." He said, "You know, all these zeros in my bank account, they don't. At the end of my life, they don't really mean anything. I worked so hard for them. I'm scraping for every minute now." So, you know, when you're young, you have a lot of time, but not money. But honestly, the most valuable thing is time. So make sure we, you know, now all of a sudden I went from laughter to serious. But you know, let's always remember that, right? So spend time with your family, because that's all you know, right? So anywho, God bless you guys. It's a privilege and honor, and yeah.